support and resistance, also known as supply and demand levels. Now, the majority of price moves start or end at key levels of support or resistance. This is where we're going to look for our trading setups to develop. Okay, these are the setups we'll talk about a little bit later. Now, there's two forms of support and resistance. We have price support and resistance, which are things like swing highs, swing lows, support shelves, and resistance ceilings. Then you have measured support and resistance, which are things like Fibonacci levels, trend lines, and pivots. Now remember to view support and resistance as zones and not always exact price numbers. A lot of times what you'll see is price will come down to test the area. Okay, it may break the specific level. It may break the Fibonacci level. It may break the swing high or the swing low and then quickly reverse. Okay, for a level to be broken, price really needs to trade below it significantly, not just come down and test it once and then reverse. At that point, we do not consider it broken. We really need to see it test it, trade below it. Depending on what time frame you're looking at, maybe continue the next candle, continue to trade below the level. One of the little tricks we like to use, and we'll talk about this again later, is once a candle breaks the support or resistance level, we want to see the next candle actually trade above or below it. So in the example of support, we want to see price break the support level and then the next candle trade below that candle. And just the opposite for resistance. We want to see the resistance broken and the next candle actually trade above the previous candle. And confluence levels are even more powerful when looking for trading setups. Confluence levels are levels of measured support and price support that converge, okay, into the same area. And that makes it even more powerful when looking for trading setups. Now let's go ahead and look at a price chart and look at some examples of support and resistance. Here we have a weekly chart of the British pound Australian dollar currency pair. And the very first thing I want to bring your attention to is this area right in here. And I'm just going to draw a line across it for now, right in this area. And again, you can see how I'm not drawing it right at the high. I'm drawing it more around the bodies of these candles here. But you can see we came back and tested this level, tested it again, moved lower. So we have a nice level of resistance here. Now, as we come further to the right, as we move forward here, we see that we'll extend this level over. We eventually broke through that resistance. Okay, we broke through it. The next candle even traded higher, tested. The next candle traded even higher here and closed higher. All right, so then we had a pullback, and eventually this level held. Resistance turned into support, and we continued to rally. Now we see it again on a little bit of a smaller scale right here. Same thing. Price tested this area for some time, continued to fail, held as resistance, finally broke through it, tested, traded higher, came back to test it, resistance turned into support, the market continued higher. Again, market established another level of resistance. Let's look over here now, continue to the right. We rallied higher, pulled back in a corrective manner to test this level. Resistance held for support and the market continued higher. Okay, so this is an example of price support and resistance where once the resistance levels are broken, they turn into support and vice versa. This level right here is actually what we call a shelf. Oops, right here. This is what we will call a shelf. It's a level of consolidation. Once we break it, we look for that level to potentially hold for support. You could place a stop loss below that low. In this scenario, you can see the market rallied. We did not see divergence between the swings. So we had a good buying opportunity here when price came back to test this support shelf. Okay, a ceiling is the same thing. So let me just go ahead and clear this off. A ceiling is the same idea, but just as resistance. Here we can see the market established a level of support. All right, and we'll just draw that across. Here the market established a level of support. So now this area, when price traded below it, this area became what we call a resistance ceiling. All right, and you can see the market broke through it, came back to test it right here, and then continued to the downside to fulfill the correction. Now, obviously, this would have been counter trend with no divergence, so this isn't something we would have traded to the downside. Okay, but I just wanted to be able to show a level of resistance here, and this is an example of support turning into resistance on the correction. Now, on this same chart, we also have an example of a confluence. I can already see it here. Or at least I believe we do. Okay, so right here on this corrective setback, remember we had this level of price support. Okay, previous resistance, we had this level right here of potential price support. You can just move that up. Now let's take our Fibonacci tool and measure this particular price cycle. Remember, this cycle started when we broke through this previous resistance term support. We came down and tested it, and then we began this cycle. Let's go ahead and measure this particular cycle, and we used the most common fibs we use looking for trading opportunities are the 50 to 62%. All right, so let's just take it from that low to the high, and you can see the 62% Fibonacci retracement lines up very nicely with this previous price resistance. Now we're looking to hold for support. Okay, so this gives us a nice confluence area to look for a potential trading opportunity. And I'm almost willing to bet if I draw another fib on this, let's just see, hope I don't prove myself wrong. If we draw another fib on this, yep. All right, well, what I'm doing here is I'm drawing a Fibonacci level from this low, okay, the low of this, and now we're measuring this entire cycle, okay, from the low to the high. Look at that 38% fib. Let me just bring it over here so we can see it. Look at that 38% Fibonacci retracement. Everything lined up right there. Okay, so a nice triple confluence. We had overlapping fibs. We had previous price resistance, now turned support. Great place to look for a trade. And even jumping ahead a little bit, if you wanted to wait till after price reacted there, what you could do is you could have a limit order in, but if you waited till price reacted, look at the candle. Look at that nice bull candle, reversal candle there. Okay, so just some examples here of using support and resistance, both measured as well as price.